Let's get more as we get over to Bremer Landesbank at Volker Hellmeyer, who joins us from there. Volker, great to see you. Well, what are you making of these comments coming from Jürgen Stark this morning?
Well, we just discount the Greece story a second time. We did it in December once, now we do it twice. The fact is, in my eyes, that Greece will not be let down. When we don't let down the Baltic states, when we don't let down Iceland, then that accounts also for Greece. Of course, Mr. Stark is correct when he says the European Union has no mechanism for bailouts. That is absolutely true. But the fact is, Greece is on its way to take measures in order to have more fiscal discipline. And in that respect, I think that this story that prevails, that has an impact on the foreign exchange market currently, will not last for a longer while.
So what will last, actually, Volker, in that case?
Well, I think what we are seeing is that the global economy is picking up. When we look at the global PMI figures we received over the last few days, whether from China, whether from the Eurozone, the US, then the situation is looking a lot healthier. And I think lots of economists will have to change their forecasts on their GDP estimates of the global economy looking forward. And that means that risk aversion will recede. And that will have a positive impact, by the way, also on the budgets of the country. So the problems we are talking about currently will not be of the same severity going forward. In that respect, I'm looking for the euro-dollar, for instance, that we see that we won't see much more weakness going forward. The worst-case scenario, I put it around 140, maybe a blip below, but 142, 143 already offers very good support.
Right, so you see major upside for the euro, but what happens, through the course of this year as we see these stimulus measures gradually being withdrawn? Who's that going to benefit?
Well, I think stimulus measures will be taken back by central banks in the first place, and that won't have a big impact. Whether you pay 1% interest in the eurozone or 1.25%, 1.5%, won't have the big impact at all. What we are seeing is that the stimulus measures of the governments still have a further impact on the global economy, which is positive. So our forecast is around 3.9% global growth of the GDP. And also we see that the emerging market countries are really powering ahead. Look at China, look at South America, look at India, and they have a share of 45% of world GDP, and that will have a positive impact also on industrialized nations, in particular those that have a strong export economy.
Volker, that obviously brings us on to what we saw last year, where the dollar was the funding currency, was used to finance investment in other nations, i.e. the carry trade here. So some of that repatriated at the end of 2009. Does it come back into fashion looking ahead this year?
I think so. It will towards the end of the first quarter. That is what we assume, on back of the fact that the US economy is not powering ahead on all cylinders. What we are seeing is that the real estate market, that the construction area is still very, very weak. In that respect, the US will lag the upswing of the world economy, and that means also that the Fed will have a different approach on the interest rate policies. We are not expecting the Fed to raise the rates prematurely. That is what the Fed, the FOMC, is also saying over the last few weeks.
Volker, we're out of time.
All right.
Thanks very much indeed for joining us, Volker Hellmeyer there.